My task this afternoon is to talk to you about the positioning of PNG for the energy transition, and particularly from an investment perspective, and being an ex-Navy clearance diver, as I think you pointed out, from a very practical perspective. As you can appreciate, rendering safe unexploded ordnance gives you a very practical and safe view of things. I have just over 20 minutes to do that, so I'll cover a fair degree of territory, but it will be broad, and it probably won't be as deep as some might like. But I think in order to get to that point, you need to sort of see the breadth of what we're going to talk about. Inevitably, presentations like this don't come together with one sort of input. And in fact, I'd like to recognise Zani Taron, who you saw earlier on stage, and Sesi Wago, who is the country leader for KPMG in Papua New Guinea, as key participants. And also I've had access to relevant parts of our business, from the audit, deals, tax, legal, enterprise and consulting businesses, to pull this together. Before we get too heavily into the broader investment themes, I wanted to start by setting the scene in PNG. And for many of you who are in the room, you might say, well, actually, you know, I know all of this, and some of you may, but I'm sort of also speaking to potential investors in PNG, and the audience for me today, and I'll talk about it a little later, spans more than just people who know PNG, but people who want to get to know PNG. So it's probably worth just getting across a few of what I call as being, you know, the ESG facts. So from an environmental perspective, I think James Marape, in his most recent speeches, talked about the environment, and he recognised we cannot talk about climate change without talking about the forest protection, oceans and green economies. And I think that's a theme that's sort of come through this morning. I think that was further recognised by French Prime Minister Macron in his most recent visit, and the joint announcement on the EU-funded Forest, Climate and Biodiversity project. Because after all, I think you will recognise PNG is a hugely diverse, in fact, it's one of the world's 17 mega-diverse countries, 7,000 known plant species, the third largest expanse of tropical rainforest in the world that occupies less than 1% of the world's total area, home to more than 7% of the world's biodiversity and 39 bird of paradise species. So an incredibly precious resource in any measure. So I guess the question is, how do you protect and manage that diversity or that biodiversity in a way that preserves it for future generations, whilst also providing social advancement and economic growth of PNG? And we've heard a lot about that this morning. And if nothing else, Macron's recent visit symbolises the geopolitical importance of Papua New Guinea and the rising prominence of nature in investors' and regulators' agendas. It's fair to say capital, and we'll start to talk about that now, has been thought of only as money traditionally. But capital ultimately describes any resource or asset that stores or provides value to people and the economy. Natural capital is a way of thinking about nature in much the same way as traditional capital. If we invest in it, it creates value, and if we degrade it, we limit its value. This is both a challenge and an opportunity, and one that the government, energy companies and investors, who are through the audiences I'll talk to today, have a role in supporting. From a social perspective, again, some will know this. The PNG population is somewhere around, I think 11 million was quoted this morning, and it's thought the average age, we haven't had a census there, is around 22 years. The GDP per capita, approximately $3,000 US, which ranks PNG 130 in the world. There are over 800 living languages are spoken across PNG, and 97% of PNG's land is customarily owned by traditional owners. And there's a very significant opportunity to use the natural wealth below the ground, and you've heard how some of the companies are doing that at the moment, to enrich the lives and livelihoods of the people, and to improve their access to affordable, reliable and sustainable energy. There's also a huge opportunity to help people like these children to have a prosperous future. So the question remains, how do you make sure PNG captures its fair share of value from investment and shares that wealth with future generations to create social advancement and opportunity? So we've done the E and the S. The final part of the equation is the G. And obviously what I would talk about here, and specifically this covers many things, but in this instance it's the role of government to create stability through policy frameworks and conditions that are suitable for international requirements, particularly international investors looking to invest. But it's also got to consider the impact on socio-economic standards and the natural environment within PNG. And this will require the appropriate adoption of international frameworks and the development of PNG ESG policies that enables investment while ensuring a positive impact on socio-economic and the natural environment. And I was pleased to see, and looking sort of in preparation for this, the PNG Stock Exchange has just released a document titled Corporate Governance Code for Listed Issuers. And it's got specific guidance on environment and social and reporting, and it's got standards. The standards 15 to 17 cover that. So this world is shifting within PNG in recognition of the change more broadly. If we think about the energy transition and we think about the main players involved in that, and I'm being very simplistic for the sake of time this afternoon, we're going to talk to three different types of actors in this environment who are looking to potentially invest or make PNG investable. The first of those are energy and resources companies and the organisations that provide services to them. The second is obviously government, and the third, investors. And I appreciate that the stakeholder landscape is inevitably much more complex than this, but to simplify it for effect in this instance to be illustrative. So in order to do that, with a focus on these three groups today, I want to talk about three things. Being a consultant, I can typically only talk in threes and remember three things at a time, so that's why you got them. The direction of energy transition investment and an emerging paradigm for value creation, some of which was alluded to this morning. Differing and common priorities for investment across the three stakeholder groups. International standards driving change, and then finally, I'd say a call to action and something that I'd like the three groups to think about taking away. I think it's important you set the scene for how we see energy globally, and I think one of the key messages I wanted to leave you with is, while we're moving at pace in relation to an energy transition, hydrocarbons remain key fuel sources in the world today and will do for some time. I've looked at all, or not all, but I've looked at 11 different energy mix forecasts, and not one of them has oil or gas removed from that the energy mix by 2050, and I would say beyond, because bear in mind it's net zero, not absolute zero we're aiming at. And I would argue, as much as was contended earlier, that oil and gas has a key role in enabling the transition, and in essence, obviously, the part of that that's critical, and I think it was alluded to by the earlier speakers from Exxon and Santos, is doing that in a responsible way and in recognition of the need to decarbonise as massively as you can. I think that the challenge, though, is ESG expectations of hydrocarbon companies and energy companies in particular are evolving rapidly, and the ticket to play is getting more challenging and required a greater vigilance. If you look then at global investment in renewables, it's growing and is already outpacing hydrocarbons by a factor of 1.5 to 1. And that's logical when you think about the size of the challenge that we face in terms of decarbonising our environment and embracing renewables as part of the energy transition. If you look at the estimates, and I've seen a number of estimates, but let's take this one from the IEA. By 2030, we need to have $4 trillion invested in renewables, of which $1 trillion needs to be in developing economies. And I think if you look at the latest energy report that KPMG has participated in, you'll see that the contribution of hydrocarbons to the energy mix remains at about 82%, and that's only shifted by 1% in the last year. That's in spite of significant investment. So we've got a way to go. I've sometimes quoted Larry Fink in some of the things I've talked about, obviously as a significant investor, as a CEO of BlackRock. And he says, few things will impact capital allocation decisions and thereby the long-term value of your company more than how effectively you navigate the global energy transition in the years ahead. The decarbonisation of the global economy is going to create the greatest investment opportunity of our lifetime. It will also leave companies behind that don't adapt, regardless of the industry they're in. The decarbonisation of the economy will be accompanied by enormous job creation for those that engage in the necessary long-term planning. And there's intense competition between a large investor pool for renewable investments, and I see this as a huge opportunity for PNG to pursue. Again, I want to talk a little about a new value creation paradigm, and for some that won't be new, and I think part of what was said earlier by the companies that spoke earlier, Exxon and Santos, kind of plays to where the thinking's going. and particularly in relation to the evolution of the value focus, where it's traditionally on shareholder value and purely on financial returns driving what matters, and companies privatising gains, and I guess arguably at points in time externalising losses, to one of shared value where businesses come first, the negative impacts are often not sufficiently internalised or are justified by doing good elsewhere. And finally, to system value, where the business is profitable but it's ideally contributing to the broader society's progress to future fitness. And I certainly have heard a lot of that from companies wanting to participate in the energy transition while continuing to produce hydrocarbons. But embarking on a whole system of change that is bigger than any one actor and focuses on the notion that how you grow matters, and I think that's critical. If you talk about global capital markets and sustainable finance as key levers to attract funding required for the just transition, capital markets are now increasingly moving towards a pricing climate and now taking nature risk into the investment and credit decision making. New sustainable finance standards and frameworks are being developed and evolving, aligning the funding terms of investees and borrowers and sustainability targets and rewarding energy companies with the incentives to meet those broader sustainability targets and transition plans. Three economic actors of the government, finance and business need to collaborate, and I think that's a key word here and one we've heard this morning, in a purposeful manner to achieve the energy transition. And key sustainable finance requires finance, public and private investors to also do the same. There are commonalities in the requirements of both energy companies and investors, and I will talk about that in a second, and that requirement on government. And probably the key thing I'd take out of that is government needing to provide a stable and progressive landscape for investment. It needs to be predictable. And the opportunities to take a holistic and integrated approach to energy transition investment, and each market participant has a key role to play. So let's just take a quick look at how each of these actors think about investment. We'll start with energy and resources companies, and I would say from my experience of talking to international oil companies and national oil companies, almost everyone I've spoken to gets it. In fact, when I was in PNG in March this year and I spoke to 4 of the major resources companies, energy and resources companies operating in PNG, they all had a major focus on ESG. That was born predominantly from their corporate approach, their corporately anointed or announced position in relation to ESG, and recognition of responsibility they have in the world in which they operate, including PNG. So I guess I'm not speaking solely to them, but I would be speaking to anyone from an energy environment looking to invest into PNG or any other environment at the moment, that the investment climate is changing and the large number of energy companies looking to invest need to understand how those changes are going to occur and effectively what will happen. Part of what they'll need to do is to focus on their own strategic priorities and how they think about decarbonisation of their broader portfolio if they have one. Shareholder requirements and expectations, and obviously they should be in lockstep with the broader understanding of what stakeholders are viewing, and particularly stakeholders these days in the form of activist investors are very much focused on ESG-related activities. The current focus is on decarbonisation for many of them. So how does your investment align with the net zero commitments in PNG? And what PNG legislation exists and how does it apply? What is the impact on the broader energy portfolio and what's the cost benefit of the strategic approach? Some would argue the second would come first, and I would sometimes say the same thing, which is around financial returns. Does it meet the investment thresholds, and how do you manage shareholder requirements? And you've seen some recent examples of European oil and gas majors effectively modifying their approach or their announcements in relation to investment in renewable energy using words like deliberate. And I think that's a function of the pressure of trying to balance shareholder returns with a decision or the ability to effectively drive towards the energy transition. And you would argue that that approach is both practical and pragmatic. And I think I'd argue that governments need to look at how they incentivise investment. From a community perspective, ISCs and NOCs have been dealing with this for years, but smaller companies or new entrants and some of the SMEs we heard about this morning on Zani Taron's panel need to learn what to do and need to learn from those who are doing it well to have a positive impact. And the last piece I'll talk about is ESG disclosure. The international expectations are evolving, and I'll cover this in a little detail in a minute, and the impact on ESG investment will be dictated by how you comply. So having talked about the energy and resources companies, let's talk about investors. Investors are obviously considering the financial and non-financial benefits, alignments with sustainable development goals, which were announced in 2016, and strategic alignment around support for the energy transition, and that's a major one. As I said, shareholder expectations. Can you demonstrate ESG considerations in your organisation? From a sustainable finance taxonomy, it's in sort of whether you endorse or aligned with the UN's establishment of the principles of responsible investment, which is encouraging institutional investors to integrate ESG factors into their decision-making processes. And we see in KPMG momentum is building towards a standardised risk reporting framework for disclosures around entities that interface with climate and nature, including risks and opportunities. The other standard that many of you may have seen is the IFRS International Sustainability Disclosure Standards. The first international finance reporting standards, the Sustainability Disclosure Standards from the ISSB, are a step towards equal prominence for sustainability in finance reporting. And the standards are aimed at creating a global baseline for investor-focused sustainability reporting that local jurisdictions such as PNG can build on. The last one to talk to is one that's also out recently, is a task force on nature-related financial disclosures, or TNFD. It again, like TCFD, provides a framework for organisations to assess and report risk from biodiversity loss. And the TNFD is aligned to the TCFD, which is already mandatory in many jurisdictions. It has been endorsed by G7 and G20 ministers and is stepping on the footsteps closely of TCFD, which is already mandatory in some jurisdictions. So this is a space to watch. It's evolving quickly, and it's one that behoves you to be across. Finally, I think if there's one thing that's common to both sets of stakeholders in the form of energy and resources company and investors, it's what they need from government. And as I said at the start, it's a stable and predictable environment for investment. And that requires a stable policy landscape that sort of incentivises sustainable investment, a desire to create economic prosperity by encouraging that investment, which we heard this morning from one of the ministers, and being clear about ESG expectations. The opportunity for PNG is to develop a fit-for-purpose policy framework, and I would argue leveraging off the lessons of others. If you look at what's happened in the US, EU and Australia, in those jurisdictions, you would absolutely seek to identify what's worked well, and what's been a little more difficult and bureaucratic to deal with. I certainly don't stand here in Australia suggesting for a second that we've got it right, nor would I suggest the EU or US have got it completely right. But one of the things I have observed is the impact of the Inflation Reduction Act on inbound investment in the US, and the huge impact it's not only had on that investment, but the investment in renewables and the chance or the opportunity it creates for carbon trading to occur in that environment. It has been probably the most significant piece of legislation with the greatest impact. I would argue that other jurisdictions can look at legislation like that. I think the Green Deal out of Europe has some merit, but I think it's something that each country will need to work out how effectively it works for them. Financing the transition, effectively financing activities that are meaningful and credibly contributing to the Paris Agreement, the Global Biodiversity Framework and broader Sustainable Development Goals, and standards, metrics and targets. I think one of the key things to do here is for the government to define how you set targets, how you align them, and how you put in place policies to measure them. And you'll see things like the safeguard mechanism in Australia as a mechanism for driving down emissions. Obviously, there's work to be done on the baseline, but in essence, the intent is to make sure that energy companies, if they're making a commitment, are demonstrating their action. And I would argue that has benefit way beyond, obviously, stakeholders outside the organisation. The ultimate benefit resides inside the organisation with your employees. So if I then look at If I then look at international standards and the new level of transparency, I've alluded to those, but in essence, I think what we're expecting is more regulation rather than less. And I think part of that is, I've talked about the ISSB, and that's obviously going to provide a baseline, a global baseline for reporting. I think you're going to see a number of central banks and regulators, including the European Central Bank, Bank of England, the Monetary Authority of Singapore and the RBA, outlining a more supervisory approach to institutions to outline their financial risks towards climate and now nature-based risks. I think you're going to see externalities previously not priced into business and finance decisions now accounted for. And you can see this in some of the activity coming out of Europe at the moment. The EU deforestation-free regulation, which is a little like CBAM, effectively is an obligation that will affect exporter traders of certain commodities. What they've listed so far are cattle, soy, wood, cocoa and coffee in order to access trade markets. And this will have real-life implications on how business is being done. Also, the expectations of responsible investors will further drive that requirement around ESG, raising the ambition, accountability and action in this space. The evolution of capturing natural value within companies reporting, and we're already seeing accounting for nature on balance sheets and how they integrate other externalities into how we do business. We already have talked about the IFRS and the ISSB standards, and that's that step towards prominence we talked about. But market maturity is expected at pace. In order to align with that maturity, organisations need to consider how they adopt a phased approach to embedding non-financial value into their standards or organisations. Ultimately, reporting will be connected to financial statements, and you obviously see that with TCFD and ultimately potentially TNFD, and those standards are coming to effect in Australia on the 1st of January. Now, whether everyone chooses to adopt them uniformly, I think, will be part of the question that needs to be asked and answered. But we expected, as I said, for this to continue at pace. So if I took a view at the end to say, if you're going to move from ambition to action, and I was going to talk to each of those three companies or those three entities, I suppose we outlined at the start, on energy and resources, investors and government, the first thing I'd say in an evolving world, particularly as it relates to ISSB and TCFD and TNFD, check what the reporting requirements mean. And I'm sure if you're a large international oil company or national oil company, you're across this. But if you're a small to medium business and you're thinking about how do I get into this space, you need to understand these very clearly. You need to refresh your ESG materiality assessment. That'll become increasingly important. And obviously, I said share, but I'd say gather the experience of others operating in this space and learn from them. One of the guides, and this is a bit of shameless self-promotion, KPMG put out last year through the Australian Gas Industry Trust, was a better practice guide for ESG. It was targeting sort of small to medium enterprises and was focused very much on the practical steps you can take. I can also send a link of that at the end. For investors, I think it's really integrating ESG risks and opportunities into your investment decisions. I think we're increasingly going to see that, and particularly in PNG. And as I said, for government, it's really review your policies, look at what's being done globally. And I think PNG has a unique opportunity to pick out the best parts of that to choose the optimal policy solution, and look at the best way to create a predictable and stable ESG policy environment that then permits investment. I suppose in closing, I'd say that what we tried to do very quickly is to share with you that PNG has a unique resource, whether you look at it from an environmental or a social perspective. It needs, as was outlined earlier in relation to the investment that's occurring, it's very significant over the next few years, to access that investment, and as was outlined, in a responsible way that ensures that there's intergenerational equity for those, and there's obviously improved social benefit. That the the investment landscape is evolving significantly, and that investment landscape is being led by a variety of regulations and frameworks that are being distributed by various organisations around the world. They're not compulsory yet, but you'll see investors looking, particularly out of Europe, looking increasingly to leverage those. I'd leave you with that hydrocarbons are an important part of the energy mix, and they have a role to play in the transition, and that in essence it's not a binary mix between renewables or hydrocarbons. I would say it's both, working in collaboration to make sure that we get an efficient transition over time. I don't think it's fair, in essence, that developed economies who drive the benefit from cheap hydrocarbons, in essence, should then walk away from supporting developing economies who need to have cheap access to energy to effectively grow their economies. And KPMG effectively about 3 years ago did some research, which won't surprise you, which said that economic growth is inversely correlated with energy price. So the lower the energy price, the greater the economic growth. The last thing I'd say is that the key actors that we outlined today have a key role in ensuring that we, in essence, have the right level of participation and investment in PNG, but they've got to do that collaboratively. And on that note, thank you.
You might just stay up there for a minute.
Sure.
Thank you, Jonathan. And just a reminder that you can use the app to send questions through if you have a question for Jonathan while you're here. I just have one. You made a point, Jonathan, of emphasising that there are developing codes of conduct, developing frameworks out of Europe, US and Australia. Do you see corresponding frameworks developing in the Asia-Pacific region, which of course, in some respects, PNG is more closely aligned to economically as far as level of development is concerned?
Yeah, absolutely. I think they've probably one of the best examples comes out of Japan. I think Japan has been exceptionally proactive. I think they have stated a target, a net zero target, as many other countries have. They've enshrined that in policy. I've seen that firsthand in coal mining companies I work with in Australia, who have effectively looking to diversify their business by investing in renewables as a direct result of that. I've seen biomass opportunities therefore be developed out of that so that they can basically provide things like biomass to run their coal-fired power plants at 43% efficiency. So I think Japan's got a very progressive approach. I'd argue similar for probably Korea has also come out and said that. So they'd be two jurisdictions I would also look at to say, what are you doing and how are you doing it? I'd love to talk with a huge degree of pride about what Australia's doing. I think we're trying to work it out still. I think we've got a challenging duality, which is, in essence, that a lot of our revenue comes from traditionally based hydrocarbons. Those hydrocarbons are supply sources for our economies, major economies to our north, and at the same time we need to steward the energy transition as well. So I think we've got a duality that we need to face into, and Australia, in essence, I think is trying to do that. I think we're accepting that part of our responsibility is to use our financial capacity to prove up some of this emerging technology, and then we can then leverage that into developing economies in a way that helps them develop quickly.
And you made the point at the beginning of your talk that you're more talking not to the big guys in the room, but the medium-sized enterprises be looking maybe to either do business with some of the bigger global players or supply to projects that they may be stimulating through their investment. Maybe just a word on maybe the potential risks of not taking this issue seriously, I guess. That would be something, without wishing to scare people,
sure.
But there is potentially a downside, is there not?
Yeah, you heard me use the word ticket to play.
Yeah.
I think the expectation is that you'll come prepared with your ESG plan. I think that you've got a dedicated set of actions associated with it. And if I can be really honest, and I've got three young daughters, they're all environmentally conscious. I don't think they tell people what I do. Dads, they tell them what Dad does in the oil and gas space. So I think what you've got to look at is your employees. Your employees are going to be the ultimate arbiter if you've got it wrong, because they walk. And we're finding that the next generation, a lot's lamented about them. I don't lament them at all. I think they're incredibly bright, capable. They lack materiality that perhaps some of us do. But they also have a consciousness about them that puts pressure. So I think the pressure is not only external in the form of ticket to play, it's internal in the form of your staff and the people that you work with every day. I think you have to be conscious of the evolving world, and I think in doing that, you need to make sure that you've got the right things in place to participate. I would argue that, for instance, the procurement functions of some of the partners you want to work with will preclude you when they start to do KYC checks, when they start to look at the efficacy of what you're doing. I would argue that suppliers would be pretty smart if they were across all of that before they started engaging with the major players.
Certainly food for thought. Will you please thank Jonathan for us?
Thank you.